Let's be honest, every investor faces this question at some point. Should I put my money into real estate or the stock market? It's one of the biggest debates in personal finance, and the truth is, both can make you rich or break you, depending on how you play the game. Some people swear by real estate. You can touch it, you can rent it, you can see it grow. Others say the stock market is the smarter, faster, more flexible way to build wealth. So who's right? Here's the hook. There's no one-size-fits-all answer, but there is a smarter way to think about it. By the end of this video, you'll know which one fits your goals, lifestyle, and risk tolerance best, and how the wealthy actually use both to build long-term freedom. Before we dive in, let's clear up a myth. You don't have to be rich to invest in either. You don't need to buy an apartment building or own hundreds of shares of Apple. You just need the right strategy and a clear understanding of what you're getting into. In this video, we'll break it down piece by piece. Returns, risks, cash flow, time commitment, and scalability, so you can make an informed decision like a pro. So let's start with real estate, America's favorite wealth builder for generations. Why do so many millionaires love it? And what are the real pros and cons behind the hype? When people think of wealth in America, they often picture real estate, big homes, apartment buildings, rental properties, and the idea of making money while you sleep. And it's not just a dream. Real estate has created more millionaires than almost any other asset class in history. Why? Because it offers something powerful: leverage. When you buy a $300,000 property with $60,000 down, you're controlling a large asset with a small amount of money. If that property appreciates by just 5% in a year, your equity doesn't grow by 5%. It grows by 25% on your initial investment. That's leverage, and it's how real estate quietly multiplies wealth. Then there's cash flow. If you own rental properties, every month your tenants are essentially buying the property for you. Rent payments cover the mortgage, taxes, insurance, and still leave profit in your pocket. It's like having a business that pays you every single month. And let's not forget tax advantages. Real estate investors get deductions for mortgage interest, property taxes, maintenance, depreciation, even travel expenses related to their properties. It's one of the few investments where the IRS actively rewards ownership. But perhaps the biggest emotional benefit is control. With stocks, your money moves based on forces you can't influence. With real estate, you can improve a property, increase rent, refinance, or expand. You're not just a passenger, you're the driver. Still, real estate isn't perfect. It's powerful, yes, but it's also hands-on and can quickly turn into a full-time job if you're not careful. So before we crown it the winner, let's look at the other side of the coin, the stock market, where wealth grows quietly but powerfully behind the scenes. Here's the thing about the stock market. It doesn't ask for your time, your tenants, or your weekends. You don't need to fix leaky faucets or chase rent payments. You can invest with just a few clicks and let your money work quietly behind the scenes. That's the beauty of true passive investing. When you invest in the stock market, especially through index funds or ETFs, you're buying small pieces of hundreds or even thousands of companies at once. That means instant diversification. If one business struggles, others can offset it. It's the simplest and most time-efficient way to build wealth while focusing on your career, your business, or your life. Over the long run, history has been clear. The stock market delivers consistent growth. The S&P 500 has averaged about 10% annual returns for decades, and while there are ups and downs, time smooths out the volatility. The longer you stay in, the higher your odds of success. And unlike real estate, you don't need six figures to start. Thanks to platforms like Fidelity, Vanguard, and Robinhood, you can buy fractional shares with just a few dollars. That accessibility is what makes the stock market one of the most democratic wealth-building tools ever created. Then there's the power of compounding, earning interest on your interest, growth on your growth. When your dividends are reinvested, your portfolio becomes a machine that multiplies without your constant input. That's why time is your biggest ally. But the biggest benefit? Freedom. You can buy, sell, or rebalance your investments anytime. No banks, no tenants, no property taxes. Just your money growing quietly year after year. Still, with all these advantages, there are trade-offs, especially when it comes to control and emotional stability. So let's dig into how these two powerful wealth engines compare side by side. Let's get real for a second. When people argue about real estate versus the stock market, they often compare them unfairly, like apples and oranges. The truth is, both can build massive wealth, but how they build it and what kind of life they create for you are totally different stories. Let's break it down. 1. Real estate gives you control. You decide what to buy, how to manage it, when to sell, and how to improve it. Every smart move you make can boost your return, but that control comes at a cost: your time, your stress, and your liquidity. You can't just click a button and sell a house tomorrow. Stocks, on the other hand, offer ultimate convenience. You can buy or sell in seconds, and you don't need to deal with tenants or toilets. But you give up control to the market and the economy. 2. Real estate wins with leverage. You can buy a $300,000 property with a $60,000 down payment and let the bank finance the rest. That's powerful because you're earning returns on money you didn't even put in. But it cuts both ways. Leverage magnifies both gains and losses. One bad deal, a market downturn, or missed payments can sink you. Stocks, by contrast, are highly liquid. You can sell part of your portfolio in minutes if you need cash. You can't do that with half a house. 3. Here's the hidden truth. Owning physical property feels more real. You can see it, touch it, walk through it. And that gives many investors confidence. Stocks feel invisible, abstract, even risky when the market dips. But data shows that the investors who stay disciplined in the market, who keep investing and reinvesting, outperform most active real estate flippers over time. In short, real estate builds tangible wealth, but stocks build scalable wealth. Here's the truth most people don't want to admit. There's no universal winner between real estate and the stock market. The better choice depends on you, your goals, personality, risk tolerance, and how much time you are willing to put in. If you're someone who likes control, tangible assets, and doesn't mind getting hands-on with property management, real estate might be your lane. It rewards patience, sweat equity, and smart leverage. You can use other people's money, like bank loans, to multiply your returns, build passive rental income, and even gain tax advantages. The downside? It's not passive at first. Real estate can drain your time, require constant maintenance, and expose you to market swings or bad tenants. If, on the other hand, you prefer freedom, liquidity, and scalability, stocks are unbeatable. You can automate your investments, diversify instantly, and let compound growth do the heavy lifting. Index funds and ETFs give you exposure to thousands of companies at once. Historically, the S&P 500 has delivered around 10% annual returns over the long run, without you ever lifting a finger. But the catch is psychological. You have to stay calm when the market dips. Panic selling kills more wealth than bad investments ever will. The smartest investors don't pick one, they blend both. They use stocks for liquidity and long-term compounding, and real estate for leverage and cash flow. Together, they create financial stability that few other strategies can match. So, if you truly want financial freedom, stop looking for the perfect investment. Start with what you understand, stay consistent, and keep reinvesting your gains. Wealth doesn't come from guessing right. It comes from staying in the game long enough for compounding to work. If this helped shift how you see investing, hit like, subscribe, and drop a comment below. Are you team real estate or team stock market? I'd love to know your take. And remember, it's not about timing the market, it's about time in the market. Your future self will thank you.